Hey everybody, Gordon Chavez here. I teach people how money works. Today I'm going to share with you what an IUL is. You might have heard of people talking about a max fund or a laser fund. You might have heard of people talking about family banking where they use a trust in combination with an IUL. I'm also going to share with you some of the pros and cons of an IUL. So take a look at this. Let's get started.
So IUL is basically an acronym for Indexed Universal Life. And let me share with you what each of those means. So when it comes to index, that means that you're going to have access to a cash value account. And that cash value account is going to earn interest based on an index in the stock market. Universal refers to the flexibility. You can customize these policies based on your needs, and they are very adjustable in that you can adjust the death benefit and you can adjust the premiums. Life basically means that this is a life insurance policy and you are purchasing a death benefit. So now I'm going to share with you what the pros and cons are for IULs. First, let's look at some of the cons. So probably the biggest one is going to be the cost or the cost of insurance. This is a con because it can be higher than necessary if the policy is not structured correctly. I encourage you to work with somebody that really understands how these policies work. Another con can be limited index options. The performance of your cash value account is based on an index or a combination of indexes in the stock market. However, it is not like a traditional investment account where you can just buy any stock or invest in any index in the stock market. Another con is index caps, meaning there can be a cap to how much interest you can earn based on a particular index. One of the more important things to look out for is the structuring of the policy. If it is structured incorrectly, meaning it's not structured based on your goals, it's probably not going to perform the way you want it to.
If you're looking to implement one of these strategies, whether it's a max funded IUL or a family banking strategy where you combine it with a trust, you want to make sure you work with an agent that is very knowledgeable, one that really understands how to customize these policies. And that is definitely something that I could do for you.
Now let's look at some pros. One pro is principal protection, meaning you'll never lose a dime due to market volatility. The lowest return that you will get is 0%, no negative returns. Living benefits. One form of living benefits is a rider or an extra feature that you can add to your policy, one of them being terminal illness, meaning you can get early access to the death benefit if a doctor determines that you have 24 months or less to live. Chronic illness refers to the inability to perform 2 out of the 6 activities of daily living for 90 days. And the details of each of these riders can vary from carrier to carrier. That 6 activities of daily living are bathing, continence, dressing, eating, toileting, and transferring. Another living benefits rider can be critical illness. So the question would be, have you ever known anybody that's had a heart attack or a stroke or cancer? And there are others. But basically, you get access to those funds early if a doctor determines that you have one of these conditions and it qualifies for that living benefit rider. Critical injury is another one. This can be coma, paralysis, traumatic brain injury, and there are more depending on your carrier. Another pro is that there are no contribution limits. This is not like an IRA or a 401k where you're only allowed to contribute a certain amount. Depending on how this is structured, you basically have no limit to how much you can contribute to an IUL. Another pro is the tax-free death benefit. At the time of your passing or the insured's passing, the death benefit goes to the beneficiary completely tax-free. Another one is tax-free liquidity. Liquidity being the key word in this one, basically meaning that you can get access to the cash value account as long as there is a balance in there without any traditional loan qualifications. And what I mean by that, well, when you go to a bank and you want to get a loan or you want to get credit, generally speaking, they're going to check your credit. With IULs, there's no credit check. There are no income requirements, and there's going to be no payment plan, meaning you can pay it at your own pace. There will not be a preset monthly payment plan. Now, to be clear, you are borrowing the insurance company's money. You're not borrowing your own money. Your money is going to continue to earn interest uninterrupted. These policies are very much customizable, meaning your agent should be able to structure these properly. You can adjust the death benefit and the premiums as well based on your needs.
I hope this helps understand how IULs work. If this is something that could benefit you, click the link below and send us your information so we can schedule a time to talk. We can talk about your goals and how maybe we can implement one of these strategies for you and your family. My name is Gordon Chavez. I teach people how money works. Have a great day. Take care.